Welcome to SpeedyPodz episode 17. Our mission today is to quickly synthesize the biggest moves in business and technology. We're really focusing on that volatile intersection of AI infrastructure and the huge financial bets driving the market.
And that volatility started right away. The first thing we have to talk about is that CME Group outage.
Oh, right, the Chicago exchange.
Exactly. Futures and options trading just halted. It turned out to be a data center cooling failure.
Luckily, the timing was the day after Thanksgiving, so volumes were low.
Right, that minimized the impact, but their shares still took a small dip. It just shows how fragile the infrastructure can be.
And that fragility is set against this backdrop of just massive spending to build out new AI infrastructure.
It's all about who owns the foundational stack. And right now, the momentum really seems to belong to Google. We have to talk about their comeback, powered by the launch of Gemini 3.
This is their new multimodal engine, right?
It is. It excels at coding, video, reasoning, you name it. And they're integrating it everywhere. Search, Gmail. It's fueled a 68% jump in their stock this year.
Wait, 68%? What is it actually doing that's so much better than, say, OpenAI?
It comes down to efficiency.
Yeah.
Performance per token. It's just delivering a higher quality output, and it's doing it faster and cheaper.
That's a huge advantage.
It is. And the pressure on their rivals is enormous, especially when you have Google's 90% reach with internet users.
And that pressure is really being felt by the king of silicon, Nvidia.
Absolutely. I mean, Google has the algorithms, the data, and now its own custom chips, the TPUs.
So they control the entire pipeline.
Exactly. And reports just surfaced that Meta is thinking about spending billions on Google's TPUs instead of Nvidia's GPUs.
Oh.
That rumor alone sent Nvidia's stock tumbling 5%. It wiped out $250 billion in value.
In a single day.
In a single day. It just shows that no one is safe when a competitor owns the full stack.
So if Google is playing offense, then Oracle seems to be playing a very high stakes defense.
You could say that.
Morgan Stanley just warned about a looming funding gap for them, right?
Yep.
As they keep building out this AI infrastructure.
It really raises questions about how sustainable this AI race is. Oracle borrowed $18 billion recently.
Just to fund this expansion.
Yes, and estimates show nearly half of their revenue next year is going right back into capital expenditures. The aggression is spooking the debt markets.
How seriously should we be taking that debt risk?
Very seriously. The insurance against Oracle's debt, their credit default swaps or CDS.
I hedge against them defaulting.
Right.
Yeah.
It's trading at prices as expensive as we saw during the 2008 global financial crisis. The market is pricing in serious instability here.
That extreme risk underscores the chip demand, though. It's why we're seeing SanDisk and Micron Technology shares just skyrocketing.
It's a gold rush for the physical parts. Memory chip prices are through the roof. The whole AI trade is splintering from just betting on Nvidia to, betting on the entire ecosystem.
Okay, so let's shift gears a bit. What happens to the traditional industries that are struggling in the shadow of all this?
You see huge volatility from, desperate corporate moves. Take Puma.
Their shares surged recently.
Up to 14%. And it was all on rumors that China's Ant Sport might make a takeover bid.
And the context here is key. Puma was struggling badly, down over 60% for the year.
They're in the middle of a desperate revamp. A takeover rumor is the only thing moving the needle.
We're seeing a really similar story with Delivery Hero.
We are. Their shares are rallying, but only because large shareholders are putting on the pressure.
A Hong Kong hedge fund, right? Demanding a strategic review or even a sale.
Yeah, anything to unlock value for a stock that's down almost 90% from its peak in 2021.
And just quickly, we also saw Tilray shares drop after they announced that reverse stock split.
Another move out of desperation, trying to attract institutional investors. It just highlights that capital is ruthless. If you aren't one of these big tech winners, shareholders are demanding immediate, dramatic action.
So what this really all means for you is that the volatility we're seeing isn't about traditional earnings anymore. It's being driven by these massive and almost existential funding demands for AI infrastructure.
It is, which raises a really important question for you to think about. Considering the extreme debt risk Oracle is taking on one side and Google's powerful move to dominate the full stack on the other, how long can the market support this kind of spending before the AI race demands a clear financial winner?